Okay. Next, we're going to be talking about the different financial statements for manufacturing companies. The balance sheet for manufacturing companies is very similar to the balance sheet that you've been doing this whole time. The only difference really is the inventory account on it. Everything else is the same. Therefore, we're only going to be looking at the inventory account and how that is different compared to what you've been doing. The first item is raw materials. We're still going to have the inventory account. It's just going to be broken down by these three items. Raw materials is the first one. These are materials that are waiting to be used in the product. We have not started working on it yet. It's just the supplies we need to make it. Next, we have work in process, or we better known as what's called WIP, W-I-P, WIP. This is the product that we're making, and it's partially complete at the time of counting our inventory. It's inventory that we have started making, it's just not quite finished yet. The third category of inventory would be the stuff that's done. This is called finished goods. So we have completed products for sale. Everything on the balance sheet would be the same. We still have our assets, our liabilities, and our equity section. The only difference is inventory in our assets section will be broken up between these three accounts: raw materials, WIP, and finished goods. Next, we'll talk about the cost of goods manufactured schedule. This schedule is very similar to what an income statement would be. Basically, instead of having all of the expenses related to the factory on the income statement, we're going to put all of these expenses on a separate schedule, cost of goods manufactured schedule. It's going to list all the factory expenses. We're going to total it up, and the total of all those expenses will then be carried over to the income statement. This makes things a lot neater and organized. Instead of having all the expenses listed on the income statement, we'll have a separate schedule with just the manufacturing factory costs. What goes on it, we start off with the product costs, the ones that we just went over. So we have the direct materials, the direct labor, and the overhead. When you add this up, this is your total manufacturing costs. So all these expenses will go on there, as well as our beginning WIP, the work in process, minus the ending WIP. So it basically just shows us how our WIP has changed over the year from what we started with and what we ended with. So we're going to add that to it. So we take all of our product costs, material, labor, and overhead, add what our work in process balance was at the beginning of the year, minus what it was at the end of the year. This will give us our total cost of goods manufactured. And like I said, we're going to use this number to carry over onto the income statement. Which brings us to the income statement. Once again, the income statement is the same that you've been doing through all the other chapters up until this point. It's going to be looking like how a merchandiser would have it, by having sales minus cost of goods sold equaling our gross profit. Right? Remember that cost of goods sold is an expense. We kind of just pull it out from the other expenses to find where our gross profit is. And then we're going to subtract all other expenses and add any other revenues not related to the operations. That will give us our net income. This is all still the same. The only difference is going to be cost of goods sold. So cost of goods sold is going to change slightly compared to what you've done in the past in accounting 1. Instead of just putting a number, here's your cost of goods sold, we're going to break it down by what makes up cost of goods sold. What we have is our beginning finished goods inventory. This is our finished goods inventory from the beginning of the year. We're going to add cost of goods manufactured. Remember, this comes from the cost of goods manufactured schedule on the previous slide. This is all of our manufacturing costs. When we add that together, we get the goods available for sale. We'll then subtract our finished goods ending inventory from the end of the year. This will give us our cost of goods sold. Now, in summary, the income statement is the same, except cost of goods sold will just be split up and it'll show the full picture on what is going on with it. Instead of just putting it on one line, it will be very detailed like this. We will now be going over a few practice problems that relate to the financial statements we just went over. Please follow along with the classwork handout. Number 2, compute the total manufacturing cost for a manufacturer with the following information for the month. It gives us account numbers. So we got direct materials, direct labor, factory supervisor salary, salesperson commissions, depreciation for the factory and for delivery equipment, and also indirect materials. We want to know what total manufacturing costs are. To do this, we need to find what the 3 main product costs are. This would be direct materials, direct labor, and overhead. Some of this is pretty easy to do. Some of it takes a little bit more thinking. We have direct material, direct labor, and factory overhead. Take a moment to look through the different accounts along with their amounts. Which one would be direct materials? It would be the first one. Direct materials used, $53,750. Take a moment to look through the accounts and find which one would be direct labor. It would be the second line, direct labor used. C part of this is pretty easy, $12,000. Factory overhead's a little bit more complicated. There are a lot of things that go into factory overhead. Factory supervisor salary is next. Would that be considered factory overhead? Yes, it would. It has to do with the factory, so the $8,000 would be included. What about salesperson commissions? That is not part of the factory, so that number is not part of overhead. Remember, that is a period cost. Depreciation on the factory building has to do with the factory, right? So yes, this one here would be part of overhead. Depreciation on delivery equipment. Remember, delivery equipment has to do with selling the product. So this would not be part of overhead. Lastly, indirect materials. Is that part of factory overhead? Yes, it is. So factory overhead will consist of these 3 numbers here. I just totaled the 3 up and it came to $12,750. Now add all 3 of them up and this would be your total manufacturing costs. I got 78,500. My total manufacturing cost, 78,500. Okay. Next, we have problem number 3 on the classwork page. Compute cost of goods sold using the following information. We have finished goods inventory at the beginning of the year, cost of goods manufactured, and finished goods inventory at the end of the year. As a reminder, cost of goods sold is your finished goods inventory at the beginning of the year, plus your cost of goods manufactured. That will equal goods available for sale, minus your finished goods inventory at the end of the year. I recommend pausing this, trying to fill out this classwork problem number 3, see if you get the same answer that we get as we do this together. The first item was the finished goods inventory, the beginning balance. We're going to take that and add that to the cost of goods manufactured. Let's write this in. I'm just going to abbreviate finished goods and a little b for beginning. I'm not going to write the whole thing out. And that's 500. This is pretty easy. All the numbers are given to you. Like I said, we're going to add cost of goods manufactured to that number. Cost of goods manufactured of 4,000. When we add these together, this equals our goods available for sale. I'm just going to abbreviate goods available for sale, only because it's hard for me to write with this. 500 plus 4,000 is 4,500. The last step is to subtract the finished goods inventory ending balance from this. So we'll take the finished goods balance, comma, E for ending, the end of the year balance. It's 750, so we're going to subtract this number. Take out your calculators and do the math. We have 4,500 minus 750. What did you get? It should be 3,750. Next up, we have the next classwork problem, number 4. Prepare the 2017 schedule of cost of goods manufactured for Bar & Company. We want to do the cost of goods manufactured for this one here. Remember, for this one, we need to add up all of our product costs, our materials, our labor, our overhead. We want to add our WIP from the beginning of the year, then subtract our WIP from the end of the year. As a reminder, this is what it looks like. Our material, labor, overhead equals our total manufacturing costs plus WIP at the beginning of the year minus WIP at the end of the year. Our 3 product costs, direct materials, direct labor, and overhead. We're going to add all 3 of these together. Direct material, direct labor, and factory overhead. I'm going to keep the amounts the same. We have 190,500 for direct materials. Direct labor is 63,150. And the factory overhead is 24,000. Add these 3 numbers up to get your total manufacturing costs. You should have got the number 277,650. Next, we will add our work in process from the beginning of the year. WIP, put a little B for beginning. That's the 157,600. We're actually going to add this number to our total product costs to get the total cost of work in process. When you add those 2 numbers together, you should get 435,250. Lastly, we subtract the work in process at the end of the year. So we're going to subtract WIP from the end of the year, which is 142,750. This will give us our cost of goods manufactured. Remember, this also then appears on the income statement. So when I subtract these, you get 292,500. 292,500. That should be your answer.